Circle, the company behind USDC, is trading around $142 a share, and that's 47% down from its launch high. But the question is, can a comeback actually happen? Because if it does, we could be looking at the backbone of digital money, not another overhyped crypto play. See, Circle isn't just minting stable coins anymore. They're building infrastructure. That's APIs, wallets, and compliance rails. And all of these could connect banks and fintechs directly to blockchain. And that's where things start to get interesting with Circle. Revenue jumped 53% year over year to 658 million. Reserve income up 50%. Other revenue up 252%. Yet Wall Street still calls the stock a hold. And I think they're missing something. Circle, well, they're expanding partnerships with giants like FIS, Binance, and Fiserv, a quiet signal that adoption is accelerating. It's not fighting banks, it's empowering them. And that's the part I think that most investors are overlooking. So in this video, I'm going to break down why Circle's pivot could redefine how money moves and what that means for the stock price. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. All right, so let's get into it. Circle is a fintech and blockchain infrastructure company that builds digital rails. These rails allow money to move safely online. Simply put, Circle is building the highways for how digital cash moves, and that's a huge deal. USDC, its flagship coin, is one of today's most trusted stablecoins. If you've ever used a stablecoin that didn't collapse overnight, chances are it was USDC. Circle was founded in 2013 by Jeremy Allaire and Sean Neville. Today, the company has moved its headquarters to New York City, allowing the company to fit better in with the US financial markets and, of course, to be closer to its regulators. Today, it has licenses across 49 states, DC, and even Puerto Rico, giving the company one of the broadest regulatory coverages in fintech. And that kind of footprint isn't easy, but it's what separates legitimate fintechs from the fly-by-night ones. And here's where it also gets fun. Aside from stablecoins, Circle manages reserves of short-term treasuries and cash. These are assets that steadily generate yield and form a key source of revenue for the company. At the moment, there's 73.9 billion in USDC in circulation. That's nearly the size of some small country's money supply, and it's all backed by real dollars. So Circle isn't just running a crypto project, it's running a mini central bank. And that sets the stage for what comes next. But that's not the interesting part yet. Circle is pivoting from being simply a token issuer to being an infrastructure provider. And this is the kind of strategic pivot that either makes or breaks a fintech. It's rolling out APIs, wallets, and compliance systems so that fintechs, banks, and remittance firms can move money faster and cheaper. Think of it like a backbone that connects traditional finance and blockchain so banks and payment companies can now tap directly into blockchain rails without having to touch crypto speculation. So you might ask, who uses Circle? Well, the answer is the traditional markets, the banks, corporations, and digital market or crypto exchanges. Basically, Circle's adventure is worth watching because it's not competing with banks, it's empowering them to move faster. And when you empower the incumbents instead of fighting them, Well, that's where you find that real growth can happen. So the big question is Wall Street starting to notice the company? Well, at the time of recording, Circle is trading around $142 a share, down 47% from its launch high of $263. That's a brutal drop, but the recovery story might just be starting. Despite that, the stock climbed about 15% in the previous month, signaling momentum may be just around the corner. Now, when I last covered the company, it was trading around $146. So that went down a little bit, 3%. But the way I see it, it could be setting the stage for a comeback. Every compression phase in early stage fintechs feels painful until it doesn't. I mean, early stage fintechs are prone to compression, but it also sets the stage for a potential recovery. And the next big clue, it's hiding in the company's financials. And this is something that was recently brought up in my Discord. So let's talk about Circle's financials. Circle is set to release its financials on November 12th. Right now, I'll cover their previous results. Now, in their most recent financials, Circle reported that sales increased 53% year over year to $658 million. That's not small growth, that's hyper growth. Despite this, they incurred a net loss of $482 million. But wait, it's not a big problem because it's primarily due to the cost of going public, the initial public offering related non-cash charges. So the losses, they're not from operations, they're accounting write-offs that are tied to going public. And when these write-offs or one-offs are stripped out, it's clear that Circle is already generating positive cash flow, highlighting its momentum. And that's rare for a newly listed fintech. Most are still burning cash. Now, if we dig deeper into the numbers, we see that reserve income is up 50% to $634 million, while its other revenues surged 252% to $24 million, which essentially means that adoption and monetization are accelerating. So Circle isn't just growing, it's scaling in the right places. And there's more good news from the report. Management announced that the company is expanding its partnerships with known and established platforms like Binance, Corpay, FIS, Fiserv, and OKX. This move not only strengthens Circle's market credibility, but also positions it to drive higher transaction volume and revenue growth in the coming quarters. And if it wants to win this race, partnerships are going to be their secret weapon. Every connection means more flow through its rails and more income. But here's where the story starts to tighten, right? The valuation. Right now, Circle stock trades at around a 15 price to sales ratio. Price to sales, or P to S, is a metric used to determine how cheap or expensive a stock is based on its revenue. A price to sale of 15 means that the stock is trading at around 15 times its revenue per share. Or to put it more simply, investors are willing to pay $15 for every $1 that the company is pulling in. So revenues are pricing in future growth, not current profit. It's confidence, not cash flow, that's driving the valuation. Now, yes, that's a bit high compared to the broader software or fintech industry, which trades around a 3 or 4. It's trading rich, but that can change fast once the earnings catch up. Now, you might be more familiar with the price to earnings ratio, which compares the trading price of the stock to the earnings per share. That's the traditional way of checking valuation. But as I mentioned earlier, Circle isn't profitable yet, at least based on generally accepted accounting principles or GAAP. So Circle is still in the prove it phase, and markets don't pay for promises forever. But if it delivers, that 15x could start to look cheap. So is Circle stock a buy right now? Well, a consensus among 18 Wall Street analysts rate the stock a hold, but they see upside of as much as 97% from here. That's almost double. And analysts, they don't throw out these numbers lightly. So the groundwork I see as being set, and Wall Street's just waiting for Circle to execute. If the company builds adoption through institutions and expands globally, then I see the company likely to become the financial backbone, potentially, of digital money. But what about you? Do you think Circle will become a big player, or will its run end sometime soon? Let me know in the comments below. And while you're there, don't forget to like and subscribe because it'll help others find the video It'll support the channel, and you won't miss out on any of my future deep dives. Well, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.